Hello everyone, my name is Grigor Horat and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments and markets for this week. This video has been brought to you by Orbex. I will take a look again the same markets like last week: Euro dollar, cable, dollar Swiss, gold, S&P 500 and dollar yen. So firstly, let's take a look on the Euro dollar. Well, we have seen a very nice move. Now if you were looking for our analysis last week, you know that I have been talking about this potential drop for all the way back to new lows, because we identified this current rise as an ABC move for a flat formation. And the reason for this count was mainly because a higher degree trend is clearly to the downside. So obviously I want to label each bounce as a corrective movement. Then you also had seen just a temporary drop here to a new low, despite very aggressive sell-off, but still this sell-off was seen as a free wave movement on a lower degree time frame charts. And then you have this very strong sharp recovery, which is very common for wave C. And the next very important thing is that actually this wave C has stopped at this resistance that we were tracking. So back then also from that resistance we have seen a 5 waves down. Now this was only first leg of this current weakness that is still in progress and is likely going to see more weakness. Why I'm expecting more weakness? Well, because if we are here breaking to new lows, then obviously we can expect that this current decline will unfold in 5 waves. But if we look here at the 4-hour chart, well, that's a wave 1, you have a wave 2, and looks like that this very strong move to the downside that occurred last week appears to be wave 3. Why wave 3? Because it looks like more extended compared to wave 1, and normally wave 3 will be the extended lag when you compare it to waves 1 and wave 5. So now ideally we are in wave 4. Now wave 4 could be a little bit more complex. I'm not expecting to be such small wave like finished here at the recent high. So I would not be surprised if we maybe see here wave 4 pushing once again towards 38.2%, and then we see a drop, or there's another potential scenario that we will just consolidate here for a triangle formation and then we see a break to the downside. But I think that it's very important to also to realize that market is trying to here on the upper side is trying to find new sellers here at the previous swing low. So that's why I'm thinking that maybe really the triangle could be the best option. But generally speaking, I think that euro dollar could see more weakness. Okay, as long the dollar index is trading above 100 level, I think that the trend is clearly visible, and obviously this dollar cycle may continue to benefit also against other currencies. So if we take a look on cable, you can see here that cable made a very strong drop, clearly an impulsive wave 3 personality. So I'm looking for more weakness, but notice that market actually respected those trend lines within this expanding triangle for a while. So maybe we will see something similar down here, but again, this is just something completely different compared to the previous sell-off. So in my opinion, even if this trend line will hold only temporary. So I'm expecting more downside after a bounce. Now nice resistance here when looking at the intraday chart would be probably at 1.2130. Okay, that's the latest this consolidation before this strong drop actually occurred. Okay, so cable and euro, I think that both remains under pressure. So I think the Swiss franc maybe can do the same. We have seen a very nice strong breakout above this trend line, okay, which was actually the upper line of this ABC formation. So I'm definitely looking for low to be in play, to put in place here, but what I would love to see maybe in upcoming days is another broken trend line up there. It's connected here from 2019 highs. So if we also can take this one out, then watch out for a very quick run towards parity, and then maybe a new pullback once we reach a new swing high, because I'm sure that there are a lot of important orders up there. So you know, maybe someone is trying to buy the breakout and market may actually make a pullback, and on the other hand, I'm sure that there are some concerns about the US dollar in general because of economy. So maybe someone is looking for dollar to drop significantly, and maybe that's why they are looking for this parity level to be their stop level. And as you know, if the market reaches this level, then actually the opposite may happen. You may see just a temporary pullback and then a resumption to the upside. Now looking at the intraday chart here, again looking and expecting a 5-wave cycle to unfold up from that low. So that was wave 1, that was wave 2, and now you have wave 3 in progress. Sorry, maybe wave 3 already finished. I mean wave 4 in progress. It's a consolidation phase. Maybe we see a spike higher here and then a consolidation. Also keep in mind it's Monday. Mondays can be sometimes very tricky. I know that for the last few weeks that's not the case because we have very volatile moves and quite directional moves after all, but still, because we have seen quite nice wave 3 here, maybe we'll just now stay trapped in some kind of a consolidation, again flat, maybe a triangle, before we see more upside for a wave 5, as I said, above this level probably. Okay, now let's take a look also on gold. Now gold is bearish. Okay, it's made a very nice and strong breakdown here. We haven't seen much of decline last week, but what is very important, despite stocks coming to the downside, I do not see bounce either. Okay, so now imagine if stocks maybe will try to stabilize, which I see them after all in a 5th wave. I will show you this chart in a second. Then maybe gold could easily find even more sellers. I'm looking also at this as if investors are looking for safety and they have invested a lot of money into gold, and gold is actually underperforming, then obviously they will be, because of fear, they will be even looking to get out of those investments as well, and this makes dollar even stronger. So I'm looking here for and expecting more weakness for gold. Now looking here, I'm thinking that we are in wave A, maybe even wave 1. Okay, but that's not important. I always look at the market so that I analyze each coming wave step by step. Okay, I do not want to go and analyze too much into the future because I know that cycles can change, so, and sentiment. So I'm looking at this to be first leg of minimum 3-wave drop, expecting more weakness into wave C, maybe wave 3, but after not very nice consolidation here for wave B or wave 2. But so far, maybe this first leg that is still in progress. Now looking at the 4-hour chart to give you the perspective, I see here potential triangle in the making. Okay, it's then wave 4 if that's the case, because this first rise was in 3 waves. So it's not easy to say that this is maybe wave 2. Why? Because if you are in wave 2, you would expect something more complex, something definitely more deeper, maybe 50, 61.8%. But I realize that that may not be the case in a very fast-moving bear markets. So still, there is an alternate scenario that maybe we have bottomed here, and that maybe even here is already wave 2 finished up there, and it will see very strong decline. But still, my preferred wave count is that we are in a 4th wave consolidation, that we will see a breakdown into 5th wave and then a 3-wave rise. Okay, but no matter how I look at it, I think that gold in the near term can be headed here below this 4th wave support, maybe just a spike down there, and then we see a new recovery. But generally speaking, I think that gold may see a lot more weakness in upcoming days, if not weeks. Now let's take a look also on the S&P 500. Now S&P 500 has reached some very important levels here on a daily chart. Still, it can be, sorry, that's a monthly chart. Still, can be a 4th wave flat formation, maybe of this red wave 4 cycle. I realize that this wave 4 is quite big compared to this very small wave 2, but even if I would adjust the wave count and look for this as a 4th wave of some higher degree, I would still see this as a flat formation. So I think that the most important is to focus on this structure from here this was from summer 2018. Okay, this was wave A, you have a wave B, you are now in a wave C. And in stock market sell-offs, you know that C waves, final legs of corrections, are very strong. The same thing like we have seen in 2009. So I really would not be surprised if we see some kind of a bounce here. Now I also prepared the second wave count actually, which suggests that we are here still only in wave A, and we will see wave B rise and then a new drop for wave 4. Now this is also very interesting, but both suggest that we are here at very important key levels. Here you have this former wave 3 swing high, then you have this wave A levels that have been taken out. So I think that's a very nice and important major support, and there is that trend line as well. And then you have here also obviously same important levels. So either we get bounce only for wave B, or maybe even for a fifth wave back to a new high. Well, this is only it only matters of a time and the price action that we still need to see before one of the wave counts can be confirmed. But generally speaking, I would not be surprised by a bounce here. Now, looking also at the 4-hour chart to give you the full perspective why we may see a bounce, either that's a wave C or wave A of this much deeper decline. You can count 5 waves to the downside here, okay? And the fifth wave is now gapping lower into some fib levels. What I would pay attention on is these trend lines. Now I connected the trend line for wave 2 and wave 4 highs, and then you put this parallel trend line at the end of a wave 1, and also then at the end of wave 3 down here, okay? And then you have both trend lines, which could limit the weakness for a fifth wave. Okay, that's an Elliott wave channel, impulsive channel technique, which can actually help you to identify the potential bottom for a fifth wave. But of course, bottom is not confirmed until you see the broken trend line of this Elliott wave channel taken out. So when this happens, I think it will be very interesting for more upside here on stocks. And at the same time, I think that then dollar yen could also climb higher. Why? Because looking here on a monthly chart, this monthly chart, I think that we are in a triangle here, but looking for a wave D here on a weekly, which should be made by 3 waves. So we can even see a move above 114.70. It was actually a high from 2018 in September. Now looking at the 4-hour chart, actually, or 1 hour, I have 2 wave counts. The first wave count is still for potential expanding diagonal here, and it will see a deeper pullback, or we will just stay consolidating here, then it's just 4th wave and we will see a break higher. I'm watching, and interesting to see how the market will actually be acting today during the US session, how the US rates will move. But I think that both wave counts are very interesting and suggest more upside either after this small or deep correction. But I think that the dollar trend is clear here. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.